Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today, we're looking at Ondas Holdings.
If you find our talks useful, please consider subscribe, like, and comment underneath. All right, let's just get right into this because, wow, I was looking at the charts this morning and, I had to double check. My screen wasn't glitching.
Yeah.
For a second, I thought I pulled up a crypto chart by mistake. The movement here is just, it's something you don't normally see with a defense tech company.
You really don't. It's been an absolute roller coaster. And you're right to be surprised. Defense stocks are, they're typically the slow, steady compounders, the tortoises.
Exactly. They are not supposed to move like this.
Not at all.
And move like this is, put it mildly, I'm looking at a 440.5% surge.
Yeah.
In 6 months.
440%.
If you were holding this stock half a year ago, you're not just beating the market, you're absolutely crushing it. It feels like overnight everyone's talking about Ondas. But my job here is to be skeptical. Is this a meme stock moment? Is this just retail hype? Or is there actually an engine in this thing?
And that's the question of the day, right? When you see a vertical line on a chart, your instinct should always be, hang on.
Always.
But here's the thing. This isn't just sentiment. That price action is actually tracking a huge, a fundamental shift in the business. We just got the preliminary numbers for Q4 2025, and they were, frankly, explosive.
Okay, define explosive. Because, Wall Street loves to use that word for like a 2% earnings beat. I want to know if the numbers justify a 400% run-up.
No, this was a demolition of expectations. For Q4, revenue came in between 27 and 29 million.
Okay.
To put that in perspective, that smashed their prior targets by 51%.
51. Okay, let's just pause on that. A 51% beat. That is not a rounding error. That's a completely different league. Usually a company beats by 5% and the champagne corks are popping. 51% suggests the analysts just didn't get it. They didn't understand the velocity here at all.
Precisely. And if you zoom out to the full year, 2025, they brought in roughly 47 to 49 million. That beat their total guidance by 23%. So yeah, Wall Street was expecting one thing, and Ondas delivered something way, way bigger.
And that's what gets the big money's attention.
That's what wakes them up. It's not just hitting targets, it's accelerating way past them.
And you can see that acceleration in the technicals, too. I noticed this surge has just blown the stock right above its 200-day moving average. For anyone who isn't glued to charts all day, that's like the holy grail signal for a long-term trend reversal.
It is. It's a major technical breakout, and we've seen some incredible spikes just recently. There was an 18% jump just the other day that completely destroyed a bearish pattern that was forming. And then, just on the preview for their investor day, the stock popped another 13.7%. The market is frantically trying to reprice this company.
Because the company they thought they knew just doesn't exist anymore.
Exactly. The old Ondas is gone.
Okay, let's unpack that.
Yeah.
Old Ondas versus new Ondas. Because if you'd asked me about them a year or two ago, I would have said, oh yeah, the commercial drone company.
Right. Railroads, power lines.
Yeah, inspecting railroads or checking for storm damage, useful stuff, but
Right.
kind of boring stuff. Not high-octane growth.
Yeah.
But looking at these reports, that definition feels way too narrow now. Are they even still just a drone company?
No. And if you're still thinking of them that way, you are missing the entire investment thesis. That was the legacy business. They have pivoted and pivoted hard to what they call an integrated defense autonomy platform.
Integrated defense autonomy. Okay, that sounds a lot more serious and, frankly, a lot more expensive than checking power lines. What does that actually mean in plain English?
It is much more serious. It's not just about specialized drones flying around and taking pictures anymore. It's a whole ecosystem. We're talking about counter-UAS, CUAS.
Right, counter-UAS, so systems to detect and knock other drones out of the sky.
Exactly. And just think about the geopolitical climate, right? Drone warfare has gone from being this novelty to a primary threat in modern conflicts. We see it everywhere. So the demand for systems that can stop hostile drones is, well, it's effectively infinite right now.
And they didn't stop there.
Not at all. They're also moving into unmanned ground vehicles, or UGVs.
So not just in the air anymore, they're on the ground too.
Correct. They've brought in assets like RoboTeam and AperoMotion. These are ground robots that can handle logistics, surveillance, you name it. They're even getting into demining technology.
Demining, wow. So they really are building out this full suite of robotic defense tools. It's not a gadget, it's a whole toolkit.
And this is all under their OAS segment, Ondas Autonomous Systems. That segment is the engine. It's not the old railroad business. It's this new aggressive defense focus that has investors so excited.
Okay, but here's where I have to push back a little. Defense is a notoriously tough nut to crack. You have the giants Lockheed, Raytheon, Northrop, and then you have 1,000 startups trying to build the next cool thing. What makes Ondas different? Do they have a real moat?
That is the single most important question, because you're right. If you're just assembling parts, you're dead. But the analysis suggests they are building a genuine moat, and it comes down to regulation and IP.
Okay.
This isn't off-the-shelf tech. It's an IP-protected ecosystem. They have platforms like the Iron Drone Raider.
Iron Drone Raider. I have to admit, that's a fantastic name. Sounds like it's out of a movie.
It's a great name for an even better piece of hardware. It's an interceptor drone. But what's even more important than the hardware is its regulatory status. Their tech is NDAA compliant.
Right, the National Defense Authorization Act. So for listeners who don't track government procurement, why is that specific tag so critical? Why is that a moat?
Think of it as the golden ticket. If you want to sell to the U.S. military, or any NATO ally, really, you pretty much need to be NDAA compliant. It means your supply chain is secure. It proves you're not using banned components from, adversarial nations.
So it's a vetting process. Not just does it work, but is it safe to use?
It's a rigorous, expensive, and very time-consuming vetting process, and that creates a massive barrier to entry. Ondas is already inside that wall. And it creates high switching costs. Once a Defense Department integrates a secure system like their Optimus platform, they aren't going to just rip it out for a cheaper startup next week.
That makes a lot of sense. It's sticky. So we have the pivot, the breakout, the moat. Let's look forward. We're in early 2026. What are they telling us to expect for this year?
The guidance is really where the bull case gets its legs. Management has raised their 2026 revenue target to between $170 and $180 million.
$180 million. Hold on. Their previous target was $140 million, wasn't it?
It was. So that's a 25% increase in their own forecast.
That's bold. I mean, companies don't usually raise guidance that aggressively unless they have really good visibility. What makes them so confident?
Exactly. They're putting their reputation on the line. And the reason they're so confident is the backlog.
Okay.
The backlog right now sits at $65.3 million. But here's the stat that blew me away. That number is up 180% just since November of 2025.
Wait, say that again. Up 180% in, what, 3 months?
Yes. In basically one quarter, they nearly tripled their contracted work. That provides huge visibility. It means that $180 million revenue target isn't just a wish. A big chunk of it is already signed and sealed.
That's incredible velocity. But it brings me to the ugly side of growth. Scaling costs money. Factories, engineers, materials. Small companies usually run out of cash right when they try to grow this fast. How are they paying for this?
The classic growth trap. But Ondas seems to have sidestepped it in a massive way. We have to talk about their war chest.
I saw a number in the report that looked like a typo. It said $1.5 billion with a B in cash.
No typo. As of the end of last year, their pro forma cash balance is over $1.5 billion.
$1.5 billion. For a company projecting $180 million in revenue, that is a fortress balance sheet. Where did all that money come from?
They closed a massive equity offering, about $1 billion in early January.
Okay, so they tapped the markets, took advantage of that high stock price to fill up the tank, but that also means dilution, right? My slice of the pie just got smaller.
It did, and that's the trade-off. But in this environment, cash is king. A lot of competitors are living contract to contract. Ondas now has this billion-plus cushion. It solves the liquidity question, takes bankruptcy risk right off the table.
So what's the plan for all that cash? Dividends, buybacks.
No. Management's been very clear. This is strictly for scaling, ramping up manufacturing, handling that massive backlog. And honestly, they're probably hunting for more strategic acquisitions. It's growth capital.
Makes sense. You don't buy a stock like this for a dividend. So we've got the growth, we've got the cash. What's the market vibe? Is everyone on board, or are there dissenters?
The sentiment is overwhelmingly bullish. You're seeing headlines like, Ondas transition if you notice, and my favorite, new defense drone darling.
New defense drone darling. Catchy.
It is. The media is waking up to the fact that the OAS segment revenue grew 900% year over year.
900%. Well, that'll do it. What about the analysts?
The consensus is a moderate buy. Average price target is around 17.29 with a high of 25. Simply, while St. just noted a 52% increase in their target.
So they're chasing the price up. They're playing catch up.
They are, and we're seeing a strong institutional flow. That billion-dollar offering closed early, which suggests there was way more demand than supply. Big money wanted in.
Okay, I have to play devil's advocate again. Because I see a stock up 400%, everyone's shouting buy, but then I look at the valuation, it looks a little scary.
It definitely requires a strong stomach.
I mean, a market cap of $5.2 billion on, best case, $180 million in revenue this year?
Right.
That is a rich valuation. This is not a bargain.
It's mushrooming, as one analyst put it. If you look at the price-to-sales ratio, Ondas is trading at about 31 times forward sales.
31. Let's just pause on that. 31 times sales. For context, what's the industry average?
Around 2.25.
So, they're trading at a massive, massive premium. That is nosebleed territory. If you buy at 31 times sales, you are pricing in absolute perfection.
You are, and that is the bear case. The argument is that the stock has just gotten ahead of the fundamentals. Yes, the growth is real, but is the company worth $5 billion today?
Yeah.
There are analysts with hold ratings basically saying, great company, terrible price.
And we can't ignore that dilution. The market reaction to that big raise was a bit mixed, wasn't it?
It was. The stock dipped about 5% on the news. The market is sensitive, and the fear is if they don't hit that $180 million target, that 31 times multiple could just evaporate.
Exactly. If growth slows from 900% to, say, 50%, which is still great growth, the market might decide it's only worth 10 times sales. And that is a long way down.
Precisely. The risk is all execution. But the bull counter argument is that with $1.5 billion in the bank, the bankruptcy risk is zero. They have the runway to figure it out.
That's a fair point. $1 billion buys a lot of time. So for an investor looking at this today, what are the catalysts? What should we watch for in the next 3 months?
Well, the big one will be Q1 2026 earnings, expected this spring. That's the first real test of whether they're on track.
We need to see that backlog converting into actual revenue.
Exactly. Then you have the macro trends, the $1.5 trillion defense budget context, and the whole robotics sector is hot. The robo-index was up 24% last year.
A rising tide. Any rumors or wildcards?
There's some chatter about a potential HQ move to West Palm Beach, maybe to get closer to defense clients, and talk of more rebranding to really cement this new identity.
Okay, let's wrap this up. The elevator pitch. Someone asks you, what's the deal with Ondas? What do you tell them?
I'd say Ondas is transforming into a legitimate defense leader. Revenue guidance is up, backlog is up 180%, and they have $1.5 billion in the bank to fund it. The valuation is high, for sure, but the momentum and the capital make this a multi-year hold into their 2026 execution.
A multi-year hold. Well, it's definitely not a boring stock.
Definitely not.
It's fascinating to watch. And it leaves me with one final thought for everyone listening. With robotics valuation multiples expanding across the board, we just talked about that 31 times sales ratio. Is Ondas's premium a warning sign of a bubble? Or is this just the new normal for defense autonomy, where software margins meet military hardware? Something to think about.
It's the billion-dollar question.
As always, if you found this helpful, please subscribe and leave us a like. It really helps the show. We'll see you in the next one.
Thanks, everyone.